What up, my devils? Sensei-tutum here with another video for you. This week, we're going to go a quick recap of the potential outcomes for S&P 500, give you sort of a couple Elliott options, and then I'm going to hit some other very important charts for the markets. We're going to talk, I've gotten some requests, gold, silver, and those are important charts to me anyway. I guess that's why people are asking me what do I think about them, or maybe they just care. But also, we're going to talk the dollar, and we're going to talk the TNX. This is a chart. These are charts, I'll show you when we get there. These are charts that I always keep an eye on, even if I'm not actively trading them, because of their implication in the market. You know what I've been telling you about this S&P chart, right? The, ES futures is what I'm using, but this S&P 500 is the most important chart for dictating what's going to happen in the markets, right? Well, those sort of are the other things that I use to tie in to get my sort of macro perspective on things. And I only use TA. That's all I use. That's not true. All I use in a serious fashion is TA. Let's say in a professional type of fashion. I'm not an economist. I don't do fundamental analysis. So I don't, I do those things, but more as a hobbyist, right? So, yeah, I keep those things in perspective. So I really try to form my opinion on the markets via TA because that's what I'm good at. All right, so the most important chart, and I said this particularly is the most important chart with these basic chart tools on it, which, more specifically than everything you see here is the base channel, simple base Elliott channel, and a simple OG pitchfork, which is just the original Andrews pitchfork. And just to do a quick recap, I have been saying to the members, you guys know, but to the public last week as well, as I came back out to do public videos, that this has been the most important chart. Should we break significantly out of this chart or out of this channel, then the primary expectation would be that we will likely come retest the high probability area for wave 2. Which, in this market, it's not always the high probability area. As you can see on the way up, you get a lot of, you do get a lot of shallow retraces. So that can't happen. However, breaking out of here sort of locks in that typical depth expectation that you see for, a B or 2 wave. Now, last week I didn't give any sort of Elliott options. I did say that there was a lot of atypical action going on here, like for instance, if this were to be a multiples exactly here, that if this was going to be an X, it's quite small, so meaning that this move is probably internal to this in some way. So it can all affect what's going to happen, right? Because you give your typical price expectations, then you have to look at the context of what happens within the moves, and you have to adjust on the fly always. You have to be agile in your thinking, never rigid. Rigid and hubris are the way to, lose your money. Anyway, so that is the primary expectation down to here now. But I did say with this atypical, we don't have a good Elliott bead on things. And with this atypical action in here, maybe with this being, an internal move to there, that we do get at least a significant bounce potentially here. Maybe it comes up and the next comes back down, whatever. Although if it came up to where my cursor is, I wouldn't expect it to come back down to here. But that's neither here nor there because we don't have the context to to have that discussion at the moment. What would basically make us pivot is if we were to return to this channel. But because of the 1, 2, 3 breaks, third break, significant break, and I did say that I thought we were bouncing, and the bounce should basically initiate a retest of that channel. And this is generally a good spot to be able to play, higher time frame, depending on what your perspective is on the 4-hour daily, maybe even 1 hour, a retest of this channel. And I think that's still the primary expectation. I don't want a more prolonged bear market than I need because it's just easier. I don't know. I'm a trader, so I'll trade it both ways, but I'm also an investor. So, when all the accounts are green, it's good. Anyway, let's go ahead and look real quickly before we do zoom in. I think in times like these where you have sort of uncertainty, it can, I hesitate to show people this because then they abuse it. But, a lot of people, I think it takes a lot of convincing coaching, we'll say, of people to get them to think about this theory correctly. So, if you take this the wrong way and use it incorrectly, by all means, go ahead. But most people that look at line, I think, in an Elliottwave perspective, do use it the wrong way. But in times like these, we can use it to sort of think of a count. And in this particular case, what we could have here, and this is just, one that sticks out, is it gives, maybe more clarity, takes out a little bit of noise. But of course, as Elliotticians, we do care about all of that price action. We really do. But sometimes you can use line in a useful manner, that instead of, a multiple zigzag to there, perhaps it's to, there, or, maybe even if we do reject here, I would still potentially think there. But let's say just going strictly on the line chart, we would have that as, get rid of that. 1, 2, 3, 4, 5, 3, 3, 5. So like this. And then of course, clear sort of structure where we die out here. Maybe the 1, 2 was actually, it was a truncation, and maybe the, for that C or whatever, and that we talked about last week, you can watch the video. But, and it's a smaller 1, 2, so smaller 3, 4. But and that they, this, instead of being the 4 of the 3, this little move, if you can keep up with me, but if not, don't worry, we're gonna move on. Instead of being the 4 of the 3, maybe it's the 4 of the C, this little tiny move. But I would stick to dominant swings, just it's safer to do. And then again, this channel should offer quite a stiff resistance that could potentially bring us down for another leg down, give us another bit of exhaustion, maybe not make much more of a low, but then we'll look at those indications for a bottom that we can, boom, pick that bottom like I love to do. Because, didn't feel it here. Doesn't mean it's not. Doesn't mean I'm not wrong. And, don't feel like strongly necessarily it's coming down. Just don't feel that the bottom's in. That's sort of the way I work on finding my entries on bottoms is, it's not necessarily like, oh, it's definitely not the bottom. It's just that, oh, this doesn't feel like it is, so it's not worth me putting the money in, kind of thing. In any event, yeah, so this is definitely a count that does stand out. Now, if we take it off of line, there's of course issues, subwave structure that, can be problematic. So take it for what it is. However, it is the most apparent count at the moment. Just one that I came up with looking at this chart before I went to record. And to be honest, for a more bearish one that does bring us down here, there's no reason for me to throw another chart for you right now, because I think that it is very, let's just say the bearish alternative is still, probably more likely. It's just not, there's no count there slapping you in the face. So why just take a random guess? It's, again, one of these things about the way people practice Elliott that I see that they do it wrong and I do it completely different. But, I can teach you about that if you want. We got a thing called Trade Devils, whatever. Come on over. So, yeah, let's go ahead and hit the other charts real quick. Potential bottom, maybe not. At least we're in the rally. Well, before we do, let's get down here on the 15-minute real quick. I just want to point out a pattern that I see. So, I don't want to call this a triangle, a rising wedge, or any of that, but I don't want to put a label on it. So you do this or do this even. But let's call it, at least, this one aside, marginally higher highs or double tops with, double tops, marginally higher highs with higher lows. These, especially when you're sort of in a trend. I love these at lower time frame. We're at 15. That's not that low. But when you've kind of got a trend going, I love to play these to break to the upside. And when I already see that, the next big point of resistance is right above, often the market will love to seek that sort of thing. Just go back out here to 1. So we check the VPVR. Let's get out here to the 12 again. Yeah, so there's a little gap right in here that we could, in the VPVR that we could shoot through, hit resistance there, reject off the bottom side of the channel, or get in. If we get in there, that's good news. Doesn't mean the bottom is definitely in, but it definitely gives credence to that count. Anyway, so yeah, I do think that there's without such a very established direction. I don't know how I feel necessarily about taking this as a trade. I want to be watching it to see, like, okay, it looks like it's time. But I do potentially, my personal opinion is I like to trade little breakout patterns like this on lower time frames. Not that 1 hour, 15 minutes, sort of the time frame that I usually do it. It's more like 2. All right, so let's talk TNX, which is the 10-year Treasury yields, silver, gold, and the dollar. Oh, we got palladium up. So first we'll talk dollar. She's massively bullish, right? But inflation, shouldn't the dollar be going down? Yeah, well, everybody's money's going down and the dollar's going up against it, and that's why it's doing this. However, I do think that we could be potentially so this is what I see out of, let's say, of this low. I see an impulse to here, slight retrace, 1, 2, 3, 4, 5, 3, 4, 5. I see a potential fifth being put in. Strong bearish divergence. Perfect, like, fifth wave stuff here. So, although, we got this 1618 up here for a reason, right? So maybe this is 1, 2, 3, 4, 5. One more swing high on even more divergence would be good. And this does look sort of corrective off to the side here. So I wouldn't be surprised to see a swing up. But this does look pretty good for, this thing needs to rest. Nothing goes the same direction straight in a straight line. It's been going for the dollar. This is a damn straight line. I do see this potentially at an area to come down. And if the dollar is coming down, things against the dollar, this is correlation is not causation, and don't take this don't take this too much, but a lot of times when you see the dollar going down, it can be good for the Bitcoin, the ES, things like that. Just because, inherently. Again, correlation, not causation. Just something to keep an eye on. A lot of people put too much that do follow this. Put too much stock into this chart, into what it will do to, say, their favorite crypto or something. Next thing, now this puppy, I always watch this one. I've talked to you guys publicly about this one. I'm sure the members know I do watch this all the time. I hadn't updated it in quite a while for them. My bad. Since right here at the 3. That we said that the 4 would be put in, and it played perfectly, right up to the 5th. And then now, what's important is, I'm kind of kicking myself because this is the daily chart, and I just haven't checked it in a while. And I did have vacation last week, short one, like a half week. But I wanted to long bonds here because this is the yield, the 10-year Treasury yield, and so it basically, if this is going up, the bond prices are going down. So I wanted to long bonds here, which would be basically playing this short. Now, at this point, we need to see if it breaks down from this. This is huge for inflation, economy, things like this. This is maybe recession fears, potentially. Maybe people aren't borrowing as much. That's why I like to say I think of, I do think of a lot of things about economics, the economy, and fundamentals, let's say, about different charts and governments and economy, not just us, not just the US, but Europe and Asia and all that. Anyway, but that's not what I'm like an expert at. So I'm not going to sit here like a lot of people probably do on this platform and espouse to you my thoughts in that regard. I really do shape my main macro view using these charts from a TA perspective, because that's what I'm good at. And, and I take the TA and I take it aside from the FA. A lot of people seem to like to form their bias through fundamentals or whatever it may be, and then try to get their TA to line up with that. I think that's like a bad idea. Like, if you have a strong fundamental analysis, what you want to do is do your TA completely, in my opinion, indifferent to that. And then if those two things agree, you have confluence, just like you're looking for confluence in a TA chart. And I'm using my hands to speak here, so it might sound weird and to show confluence. But anyway, yeah, don't do that. Anyway, so we talked about these two charts, and we're going to try to get through this as quickly as possible. I don't want to go over 20 minutes. We're already at 15. So let's boogie. I think I can do these in quick couple minutes. So, now going back out here, when I said that if the dollar's going down, again, correlation, not causation, they aren't directly, this going down does not cause gold or silver to go up. It's usually pretty conducive, though. So, as we can see, let's look. So, this is silver here. Let's do gold instead. So, if you look at my cursor at gold and silver are the same. So, we'll do here because they're above each other. Excuse me. You can see that gold, silver and gold started going down here, which the dollar was still going down. However, for the majority of this bear market for those commodities, these metals, the dollar has been mooning. And now we're sort of getting into an area that looks quite interesting on silver. It's interesting on gold as well, but we'll talk about it. So yeah, these things can inversely correlate to the dollar. They can inversely correlate to the yields, because yields rising typically not great for these, although I think that I don't know how attached they are. We'll find out. If this breaks down from here and these don't break up, then they're not correlated at all. If it does and they do, then hey, seems to be they still are. So silver, I mean, it looks pretty obvious to me that this looks sort of like an impulsive move, right? And this looks like a corrective move. I mean, it's as plain as day. We're diverging. What appears to me, just at this degree, we're on the 1 week. Goodness. This is the weekly chart. Man, silver's been freaking... That just makes, I like gold and silver, personally. I have a safe, so I put that shit in there. I buy it whenever I feel like it. So I have a decent... I have some weight on this stuff, and yeah, I'd like to see them do well, but damn, this is the weekly chart. Where is the time gone? You can't even see it all in the 4 hour. That's cray. All right. Anyway, this appears to me that it could use a fifth wave. This is ugly, but sort of, I mean, if we're just going to go ahead and build a count out through channels, it's a good way to do. Oh, we broke out of the base trend channel, probably a 3 and not a C. Look at that. Not to mention, if we go ahead and use our Fibonacci's, wherever you want to take it, we'll take it from this and say that was a flat. Oh, look at that, a greater than 1618 extension. Okay, and then we want to do our temporary channel to do the minimum price expectation for a wave 4. Oh, look at that, kind of perfect. So you would sort of expect this to take another low to the low side. Maybe we come down to this really strong support area of the $19 range, $18 range. That could happen, but I could see a low being in. I mean, this is not quite divergence at this point, but another low it would be, assuming the RSI doesn't get wonky. Silver looks good. I like the way silver looks better than gold, potentially, to be honest with you. So that's the way I'm thinking, and I would think that this would be a 1 of some degree, and we won't even, I mean, I see that this isn't the prettiest thing in the world, but this is an impulse. I'm gonna go ahead and say that 2, and then these go over that way. Let's make that bigger, change that color. Anyway, we've hit the high probable area. We've had quite an adequate time of retracement, depth of retracement. Could very well be done. People aren't thinking about these assets. That means it's usually that same with altcoins, the shitcoins, by the way. Whenever you've forgot about them because you've been interested in them, the good projects, and waiting, forgot all about them. That's when they moon. Same here. I think we're getting to that area. Gold doesn't look nearly as pretty, so I update this for the guys every once in a while, the members. And this was the last one that I really showed them. I mean, that looked like a 3-3. So, what do we know about that Elliott school? That this is probably going to be a 5 down, and same difference. 1, 2, 3, 4. Could use a 5th. Would like to see more depth here. But the time is getting ripe on these things, because what happens next is 3,000. I mean, let's just say very modest. I don't even know if this is at a 50% retracement yet. But regardless, we'll take this swing from that high. Yeah, it hasn't. Don't know that it will. But let's just say this is still a very modest decent projection. Negative 236 here, $2,300 gold as opposed to where 1,800 now. So, and it moves a little slower. You know, not a bad spot to park cash sometimes. They say it's a good inflation hedge. Hasn't been in this inflationary environment, but yeah, that's what I think about gold. So I think gold and silver could potentially use another leg down. It doesn't need to be big. Don't think it's gonna be big. Here, let's just, I would like to see it come down to here, or even here, the 50, that's where I would like to see it. But I always find that using the wave to project that it's on is the best thing to do. So if we go, drew that wrong, from two, assuming 4 is in, from 3, we'll get rid of that. And we'll just do the $1,700 gold would take us right about to that previous low where I'd like it. Basically just doing a 1-to-1 expectation from the of the wave 1. The wave 3 is a little short. It's longer than 1-to-1. That would still be, I wouldn't be shocked based on the wave relationship here to see this extend. Another way to measure for a potential Fibonacci relationship on the wave 5 is a 0 through 3 from 4 and use a 618 extension, which is basically about the same thing, right around 1,700. So I would say that would be the first target, and the second would be that it would extend. Should it extend, it would be, Fibonacci wise extension, it would be this 1-to-1. However, I would think that the 50 would put up a good enough fight. So, take that to gold, or I'm sorry, take that and translate it to silver for the same difference. But that's my thoughts. All right, boys, I didn't want to go 20 minutes. Damn, 22. All right, that's it for this week, or that's it for today. Tomorrow, Bitcoin on the Trade Devils YouTube. Check it out. All right, boys, toot out.